Rising interest rates are leading to a slower housing market in San Diego.
It's put a big damper on demand.
John Fields has been a real estate agent in San Diego for a decade. He says buyers who were once willing to get into bidding wars with offers way above asking price are now hesitant to get into the housing market.
The market is still moving along, don't get me wrong, but it's not that 10 to 15 offer type of situation over the course of a weekend. It's more like maybe you put your home on the market on a Thursday and maybe it takes a week or two to get a couple offers or to get any offers. The way I'm putting it to my clients right now is that things are simply normalizing.
Matt Fico is the CFO of California Coast Credit Union. He says he's seen home and auto loans slowly evaporate because of the rate hikes. He says when interest rates were near zero at the beginning of the year, there was a borrowing frenzy that continued through late summer.
Since then, when these rate hikes that really started to kick in, we saw the volume start to taper off.
Fico says all those rate hikes in a market where the median home price is $850,000 meant monthly payments were no longer affordable for many.
So if you're buying a same house today that you bought a year ago, your monthly payment is now up by maybe $1,000, even more in some cases. So it's a significant increase to the consumer.
He says the same thing applies for car loans.
We see consumers trying to extend their car loans out to beyond 72 months, 84 months, in some cases 96 months or even over 100 months. So those are significant, terms to pay an auto loan.
The result?
Home mortgages have pretty much gone away. We still are seeing some borrowing on second mortgages or home equity lines of credit.
Fields says buyers should not get into a home or market for the wrong reasons. If a buyer is going to stay in a house for a long time, it's one thing, but
if the answer is I'm going to sell my home next year and try to make some money, my answer right now is I don't know if this is the right time for you to buy.
But he also says
rental rates are so high, and you compare them to what your mortgage would be, and they're right on the same level, and it does make sense for you to buy.
Fico says he's seeing a worrying trend, and he hopes people also think twice about holiday spending because interest rates also affect credit cards.
Consumers are using their credit cards to pay for these basic living needs, everyday living needs that they have, and that's not typically a good sign that we like to see.
He also says institutions like his help consumers for free with debt and creating plans so they don't get into trouble. Kitty Alvarado, KPBS News.